Thank you for your patience. Oh, yay. Okay, thanks for joining, Carol. I was just going to text you. All right. Oops, did we lose somebody? Well, it looks like it's still 4 of us, but a different 4.
She had another meeting to go to. We work for the same company, so.
Oh, I see. Okay, sorry. All right, well, at least this one will be recorded and then we can.
So it was a shorter presentation. So on this one, I'm gonna do a different presentation, which is what I'd intended to do, which is the overview of SBA programs and services, certification programs, and most importantly, the lending programs and some of our resource partners. So let me pull that up and then we'll get started here.
$1,000, and if you have more folks in your household, that number increases.
As an income statement gives you a financial picture of the activities your business based on your revenues, direct costs, and indirect costs. A cash flow statement shows the changes in your business cash position over a period of time. It's vital to understand cash flow when assessing how much working capital you will be needing. Last, a balance sheet is essentially a snapshot of the business financial position at any single time. All 3 of these financial documents are important to your business, and all lenders will need to see financial information before making a decision on your loan application. Thank you. Next slide. Speaking of a loan application, now we can discuss some different funding options that you could apply for. I'm sure you all know there are many options available, and sometimes it can be difficult to find the right fit for your circumstances. Small business lending can get really confusing, but we're here to try and clear things up for you. I'm sure I don't need to tell you that it can be very difficult to manage limited cash, especially when your small business starts up and you're getting on your feet. Your first financing option should really be using your own savings or reaching out to your network for startup support. But as your business grows, a more formal financing might become available. The challenge there is that many banks only offer large small business loans to owners with very well-established credit histories. These bank loans don't make sense for many entrepreneurs. Alternative lenders fill this gap between personal savings and traditional bank financing. These less traditional lenders come in all shapes and sizes. Okay, this is a really good graphic. It visually demonstrates the spectrum of financing options I just mentioned. As you can see, newer businesses with less established credit histories can access working capital through friends, family, and personal assets. As your business grows, alternative lenders will likely be a stepping stone to traditional banks or SBA lending, which usually have the lowest interest rates and the longest payment terms. Let's take a minute to focus on these alternative lenders in the middle of the ladder. Community lenders like credit unions, community development financial institutions, or CDFIs offer more flexible lending criteria than banks. Accion Opportunity Fund is a CDFI lender, and we'll come back to that later. You've probably seen online companies that offer merchant cash advances, factoring products, or other financing options. These options can work for certain businesses, but many of these online companies are not transparent about their rates. You want to be super careful and read all the fine print before signing on that dotted line. So how can you avoid getting into costly situation? Definitely by asking a lot of questions. We really encourage you to get into the details of any loan you're considering. This looks like a huge wall of questions, but each of these questions is critical to your decision-making process. If a lender doesn't have answers to these questions readily available, we recommend digging deeper until you're confident that you fully understand the loan's interest rate, repayment terms, fees, and other features. If you ever feel like someone is withholding information from you or not being straightforward, consider looking elsewhere. Don't trust the future of your business to someone who won't be straight with you. Okay, thank you, Shanna. So when you're trying to decide between all these lending options, how can you narrow down the possibilities? Our advice is to use those financial documents we discussed earlier to fully understand your financial picture and match the loan's features to your situation. Make sure you can afford the payment amount, including interest rates and fees, as often as the lender will require you to pay. Also, be sure you understand the documentation, collateral, and guarantees that are required. And before you apply, make sure your credit profile is a good fit for the financing product itself. For instance, if a lender advertises that they don't lend to people with a credit score of under 700, and you've got a 650 FICO score, don't spend your time on the application. Instead, look for a CDFI lender or other alternative lender who's happy to work with your credit. Lastly, we've got 2 important tips to share for your assessment of a potential loan. If at all possible, set up your loan payments for an amount that doesn't eat into your working capital too much. Make the payments when your cash flow cycle is at its highest point, so you're not strapped for cash after the payment goes through. So now that you know about assessing your options and financing, we'll turn to the actual application process. First and foremost, lenders want to see that you have cash flow to repay your loan on time. Some lenders will consider your future project as cash flow, but most lenders want to make sure that you currently have the money to make the necessary payments, whether it's on a daily, weekly, or monthly basis. We'll also review some of the other things that lenders look at besides repayment ability. Excuse me, sorry. When the lender is evaluating your ability to repay the loan, they're looking for 3 things: your recurring income, your debt payments, and your savings and cash flow. Your income comes from business revenue, wages, and other wages from other people in your household. However, income from people in your household is typically considered if that person is providing a personal guarantee on the loan. Keep in mind that lenders usually consider your gross wages, but it's best practice to use your take-home pay when setting spending budgets. Your debt is reviewed in terms of your monthly payments compared to your monthly income. Typically, lenders focus on your minimum monthly payments. However, banks will sometimes estimate your monthly payments based on your total outstanding debt, especially related to the credit card debt. Most lenders want to see that your monthly income exceeds your monthly debt payments by 25 to 50%. Lastly, cash and cash flow rule today. Having business or personal savings is always important. Given the hardships we've seen during this pandemic, we recommend savings to cover 6 to 12 months of your expenses. Although that's tough during these times, total assets are taken into consideration. Many small business lenders want to see sufficient cash flow from the business to support the loan for established businesses. For startups, other sources of income and savings may be given more weight. And besides cash flow, lenders are reviewing your credit score, available collateral, and your connections. Your credit score consists of your personal and business credit history. It's preferred that any debts, including credit cards, auto loans, mortgages, and business loans, be paid on time for at least 6 to 12 months. Common forms of collateral include UCC filing, which is a general lien on your business assets. It also includes accounts receivable, inventory, equipment, vehicles, or real estate. In general, the longer your loan term, the more collateral you're going to have to pledge. Lastly, connections consist of your time in business and your network, such as existing relationships with your banker or lender, your website, and your social media presence and reviews. Okay. This slide has a list of most common documents included in the loan package. We've covered most of these terms earlier in our presentation. I'll go down to background checks and statement of use. Background checks are typically performed for larger loans over 100,000. They're used to uncover any previous bankruptcy, judgments, liens, or criminal charges. If you have any of these items in your background, it's important that you disclose to your lender up front. For some lenders, it may be a result in an automatic decline, so you want to know that before you waste too much time with that lender. For other organizations that are more flexible, it's viewed much more favorably when you disclose these voluntarily instead of the lender finding out through a background check. The statement of use is just a breakdown of how you are planning to use the loan funds. Many small business owners just say they are wanting it for working capital. However, a lender wants more specifics on how that money is going to be used, whether it's going to be for payroll, marketing, vehicle purchase. This may also help the lender identify other programs or products that best suit your needs.
All right, thanks, Griselda. And I know we got the 5-minute warning. I think we, so I'll try to speed through these, but Helen, feel free to jump in if you have any questions. So Accion Opportunity Fund, we're a nonprofit small business lender. Like I mentioned, we've been operating for over 25 years. In addition to lending, we offer business advising, coaching, educational resources, and we're always advocating for the rights and wellness of small businesses in this state and across the country. We've done over $1 billion in lending and investments in the communities in our 25+ year history. And even last year we did over almost 2,800 loans. And sorry, going to the next one. We lend in 45 states. And as a nonprofit, we really tried to focus on women, minorities, and low income or low to moderate income small business owners. Besides grants, I know Helen, you were interested in grants, but besides grants, we are a participating lender in the California Rebuilding Fund. That is a coalition of CDFIs, private and public funding that's available for small businesses in California to help them rebuild if they were negatively affected by COVID. So the requirements are, as long as you've been operating since December 31st of 2019, you may, and if you've experienced at least a 25% decline in revenue since January of 2020, you can apply for this program by visiting californialoanfund.org to be matched with a participating lender. Hopefully you'll choose Accion Opportunity Fund, as we are ready, willing, and able to help you through this process. It's a loan between $5,000 and $100,000 up to 60-month terms. And the interest rate is subsidized by those public-private funds that were raised. So it's really low at 4.25%, prime plus 1. And it's, but it is fixed for the term of your loan. And to make it affordable, it's interest-only payments for the first 12 months. So hopefully that helps with your construction consulting business, Helen. Outside of the California Rebuilding Fund, we do have our standard loan program at, for working capital. And for that, we just require 1 year in business and $50,000 in minimum annual revenue. Our standard loan program is still between $5,000 and $100,000 up to 60 months, with the interest rate starting at 5.99%. And 1 minute left. In addition to our standard working capital, we have equipment financing. That's for big rigs or medium duty truck, mobile food trucks as well. For that, startups are okay, or 1 year in business is fine too. Interest rate starting at 9.99%, depending on the product that you're looking for. And I've raced through all of that, but here's our contact information. I'll also put it in the chat when we get back to the main room. We recommend, if you do have any questions, Helen or any other small business owners that you know, feel free to direct them to us, to me, or to Griselda. We'd be happy to discuss with you directly.
I just want to also underscore there'll be an opportunity if you want to come back to this room and ask more questions that can happen in this last session.
Okay, thank you.
Thank you, Carol.
Thank
Thanks,
you.
Helen.
Take care.
You too. Take
You
care.
too. They send their questions. We can talk a little bit about the California Rebuilding Fund.
Yeah. Hi,
Okay.
Carol. Thanks for joining. I don't know if, are you able to unmute the participants? I was not able to.
Yeah, let me look at them. There's Vilma wanted to be unmuted, but I think, and Lakeisha. So I've asked to unmute them. Hopefully that worked.
It did.
Great.
Okay, cool.
Can you hear me?
We
Yes.
can.
Yes.
Okay, great.
Lakeisha had also asked to be, or was trying to unmute as well.
Let me double check. Yes, I'll unmute her. So while that's happening, was it recording before I came in?
No, I think you need to be present in order for it to start recording, but I don't know if we need, if the Q&A portion really needs to be, if that really needs to be recorded. But I know Lakeisha was asking about what to do as a nonprofit. I dropped in the chat a link to the community vision. Says that we currently help she says she currently helps families with critically ill children looking to get a facility so we can provide respite to these families who have children in the hospital. Well, that seems like a wonderful venture. Thank you for what you're doing to help those families. Looking to get a facility. I think community vision might be the best, maybe the best resource for you in terms of overall
I'm losing you.
overall resources for nonprofits. Griselda, I'm not sure, do you recall if California Rebuilding is available for nonprofits? If you could check that, but
I'll check.
California Rebuilding Fund is a loan product that's complementary to the California COVID Relief Fund. Griselda will look into see if that's available for nonprofits, but it is another California state funded loan program that's meant to help small businesses that were impacted by COVID. And so and I'm sorry, Lakeisha, I know your nonprofit started in June of 2020, so it would not qualify for this particular program because it does require that you be operating since December of 2019. But it is available for term loans up to 100,000 at a subsidized interest rate of 4.25%. So the interest rate is low because it's subsidized by state and private funding. The terms of the loan are up to 60 months and interest only payments for the first 12 months, which is hopefully makes it affordable for folks that may still be trying to rebuild from the pandemic. It's a relatively easy process. A pre-application can be filled out at californialoanfund.org, and it's 16 questions to match you with a participating lender. And Accion Opportunity Fund is one of those participating lenders that you can that we are happy to help you through the process. To qualify, you do also need to demonstrate at least a 25% decrease in revenues from 2020, and just need some basic loan documentation. So it is a good program out there outside of the grant program, which I know both of you may have already learned about, but happy to answer any questions about this or other programs that may be available. Let's see what else is in the chat.
I think at the last session, I had asked, you know, are people at risk of, you know, kind of ending up with predatory loans, or how do you spot them? You know, maybe you covered that and I wasn't in the first part of your other sessions, but it seems as if that might be something to be aware of, you know?
Yeah, that's a great question. Let me go back. We do have we do have a list of questions here. So avoiding predatory lending. So we do have this list of questions that's meant to, maybe you can take a screenshot of it, but it's meant to help you ask the right questions to uncover the correct information that you need to know to make sure that your business can afford the loan that you're signing up for. So a lot of online lenders or merchant cash advances are not fully regulated, and so they don't always need to be transparent about the terms of their lending. Merchant cash advances are not considered to be loans. They are purchases of your future sales, technically. And so that's why they're not regulated. And the average interest rate for a merchant cash advance is 50% or more.
Whoa.
Yeah, so it's certainly something, you know, for very short term purposes where you know exactly that the money is coming in and you can pay it off very quickly. It does make sense for some businesses, but for most businesses, um, it's not, it can be a really big strain on your cash flow. These merchant cash advances sometimes have a 3-month term, 6 months, 9 months, or 12 months. They usually need a daily payment or a weekly payment, or they may automatically deduct the payment from your merchant processing. So if you take credit cards, they may take a percentage, 10 to 15% of your daily credit card sales. So most small businesses don't have a steady cash flow stream of revenue coming in every day. So a daily debit from your sales could prove to be a huge strain. So it's really important to ask them, you know, what is the total cost over the lifetime of the loan. They many times will include fees on their loan, which those are usually paid first before you start applying payments to your actual loan itself. And oftentimes as well, the interest on the loan for those types of merchant cash advances is applied to the total loan amount, regardless of when you pay it off. So like on a typical term loan, for instance, like through Accion Opportunity Fund, you make monthly principal and interest payments, but if you pay the loan off early, there's no prepayment penalty, and you're only paying interest on the loan for the time that it's outstanding. So if you pay it off early, you're saving on interest. But on many merchant cash advances or other online loans, all of the fees and all of the interest are front loaded. So you are paying all of those costs regardless of if you pay the loan off in 1 day or in 12 months. So and so it's important to ask those questions. And also, you know, if you're unable to repay for whatever reason, you know, how will they, what will the lender do? So during this COVID time, Opportunity Fund really tried to provide a lot of payment options. Depending on your situation, we allowed borrowers to skip a payment or move a payment to the end of the loan, or maybe you paid half and we paid half, or in some cases, we totally forgave a certain amount of payments. So we tried to be really flexible with everybody because we knew that obviously these were totally unprecedented times, and we wanted to help the small business owners that were relying on us to help keep their businesses afloat. Many online lenders, merchant cash advances, they're not so forgiving. So they may continue to debit your account to just totally deplete your funds. They may take legal action. They're a lot more aggressive in their collections policies. So hopefully this kind of helps you direct some of your questions as you're talking to lenders and understanding what you're signing up for. And also, I know loan documents are really long and boring, but it's important to read them and make sure you understand them before you sign, because a lot of the details are in there that they may not go over with you in when they're trying to get you to close on the loan. There is one question here to highlight is, if I take a second loan, will I be double dipped? So that refers to whether or not, like with Opportunity Fund, if you get an additional financing, we refinance your existing loan. You're not paying any additional fees or anything on your existing loan. We add additional funds to your loan. With other lenders, though, they may, so say you got a $30,000 loan and you paid it down to $10,000, and you want to refinance and get an additional $20,000. Some lenders will charge you a fee on that remaining $10,000 loan, and so you paid a fee on your first loan, and now you're paying a fee on that balance for your second loan. So that's what it means when some lenders are double dipping. They continue to charge you fees on your balance, regardless if you're refinancing or not. I know I went through a lot there. I don't know if there's any questions about these questions here. Another thing, just kind of as a shorter checklist of things to understand when you're considering a loan to try to help you avoid a predatory or high cost loan, is just overall interest rate and fees, what the payment amount is and how often you need to pay. The term loan, what's the total cost, if there's any other fees outstanding there, and then the collateral. There are unsecured loans. The standard form of collateral for most loans is a UCC filing or a Uniform Commercial Code. That's what UCC stands for. That's a general lien on your business assets. So that's your accounts receivable, your inventory, any equipment, things like that. That's pretty standard to take a UCC filing. And then also personal guarantee. If you're personally guaranteeing it, you're saying to the lender, if my business can't pay from my business cash flow, I will pay from my other sources of income or other sources of collateral. In addition, they may ask for a personal vehicle. They may ask for real estate as collateral. So you really want to make sure that you understand what's being expected of you as a small business owner. Anything you'd like to add, Griselda, or any other questions? Thank you for that prompting question, Carol.
I think I would just want to make sure that as this is recording, that anybody who sees this, if they want to, what do they do if they want to connect with you later?
Thank you. So this last slide here, sorry. Oops. has some of our contact information. S.McClearn@Opportunity Fund is my email address directly. We really encourage small business owners to reach out to speak with us directly. Griselda can put her contact information in the chat as well. Because there are so many options out there today, it's best to speak with someone about your specific business and your financial situation so that we can match you with the right product, whether it's an Accion Opportunity Fund product or if it is a grant or other program elsewhere. We also have several educational programs and coaching available. Our website is aofund.org. You can visit that to learn more. You can go to our resources page to see over 400 articles, videos, and webinars about a variety of topics, including better understanding your financial statements, getting certified as a minority-owned or woman-owned business so that you can be considered for state and federal contracts, e-commerce. There's a plethora of resources there. We also have one-on-one business coaching, and you can reach us if you're interested in that at advising@opportunityfund.org.
Shanna, I'll add to that some of our educational resources are available in both English and Spanish. If you have family members that, want to learn a little more about how to grow their business, just basic cash flow, that's a really good place to send them.
Yeah, thank you. Yeah, so we certainly offer all of our services in English and Spanish, and we are focused on helping minority, low to moderate income businesses and women-owned businesses. And also too, as in like Lakeisha's case, where we don't offer any financing to nonprofits, we do have a vast network of partners and resources that we can refer you to. So if we're not the right solution for you right now, we can refer you to others. Also, Lakeisha, I was just thinking about another nonprofit partner. So California or Community Vision is one. Beneficial State Bank is another nonprofit lender in the Bay Area. So you may want to Google them. Also, small business development centers. That is a good resource just locally. Every county has them, so you can Google Small Business Development Center. They also offer free consulting and advising, educational programs, and may have a better idea of what may be locally available in your specific area. Oops, stop share. Any other questions? And what we've been seeing recently, just in general, grants, of course, everybody wants grants. They are difficult to get. There's a lot of competition, limited funds. So we do always recommend, if you are applying for grants, that you also try to apply for a loan just to see how much you may qualify for, to get a better idea of your financial standing. Accion Opportunity Fund can review your credit report with you, also go through steps that may help you qualify for a larger loan in the future. So we are a nonprofit. We're not here to pressure you into getting any sort of product that you're not ready for, but we do want to help you better understand your financial position and try to help you reach your financial goals.
I just want to say, Shanna has been a part of the planning of this event. She knows everybody, and she is really committed to helping you get to the goal that you have, and lots of different platforms for you to get there. So if you're interested in going deeper, she can help lead you to other places or help, point you in the right direction. So I really encourage you to take advantage of this amazing resource. And I don't know Griselda very well, but she's part of the team. So
Yes.
thank you so much for both of you. And I know we're about ready to close out. So
Yeah.
I
Thank you.
just wanted to add that Accion Opportunity Fund is a good option if you need a bridge loan, if you applied for an SBA product and it's taking longer than expected. I mean, then we're probably a good option for you until you are able to get that financing. And give us a call. We'll be happy to answer any questions or just send you to other resources if we're not a good fit for you.
fantastic. Thank you so much. I don't know. I'm going to, I think we're going to leave the room and get into our next, our closing statement comments.
All right. Thank you